Hello everybody, it's Tortoise Investing coming at you today with another one. Recording this on Saturday, going to be launching this video on Monday. This is the portfolio update, showing you what I'm rocking, showing you what I bought. I did end up going with Dollar General and Extra Space Storage, so we'll dive into why I did that. Before we do, if you are new, please hit the subscribe button. Join the 367 that have already done so. And make sure to hit that like button and comment down below. It helps the videos out a bunch, and I greatly appreciate it. So let's go ahead and take a look at the portfolio. Up on the year, we are up 12.08%. Not too bad. The S&P 500 is up 11.98, so right on our heels. We have Microsoft, Vici, American Tower Corp, Avi, Dollar General, and Extra Space Storage. These are the percentages. Next payday, I'm hopefully going to be able to put a little bit more into these, depending on what the prices are of them. Let's take a look at the holdings. So as of right now, Microsoft we're up 32% on, American Tower 2.5, Avi's 1.1, Dollar General's 1, and we are down just a smidge in Extra Space Storage and Vici. So I went with Dollar General because of the thought process of when everyone is greedy, be fearful, and when everyone else is fearful, be greedy. So I'm going to be greedy as long as this remains under, I'm going to say like 180-ish. I'm going to be buying it and accumulating it because I do believe in it long term. And when it comes to my REITs, interest rates are more than likely going to be paused. If not, they're going to end up pivoting in the next meeting or so, next 2 or 3 meetings, and that's going to send interest rates down, which is going to make the debt that the REITs have to take out cost less. And it's going to, I think REITs are going to do very well, and I try to position myself with really strong REITs. Vici, I feel like they've got a good grasp on in Las Vegas, for all the gambling, casinos, stuff like that. Extra Space Storage, I feel like they are the storage holding stock. They are the top dog. And when it comes to cell phone tower REITs, I think American Tower Corp has that on lock. So yep, this is the portfolio. This is what I'm rocking. This is how everything's looking right now year to date. Now let's take a look at some quick metrics with Dollar General. Yep, their adjusted free cash flow is a little low, and they did lower their guidance for the year, but I think they're going to do just fine. I think everything with this in the next 2 or 3 months, everything's going to blow over with this with Dollar General, and we're going to get right back on track. It's got a dividend yield now of 1.46%. At one point, this was below 1%. I know it was up in the 250s range. It's almost $100 off from where it was. Its payout ratio is only 20%. Very nice. It's still increasing its revenue, a rate of 10%. Very nice. The EBITDA is also increasing at a rate of 10%. The free cash flow is something that is the issue, but the management people, everyone that's over everything dealing with Dollar General, said that accumulating free cash flow is going to be their priority. They're going to try to get this back in line because it had been going pretty well, and I think it's just a small hiccup, and I'm hoping that I'm able to take the most opportunity with this. EPS is still growing, 13.73% over the last 10 years, and the dividend's still growing as well, as you see here at a rate of 15% over the last 10 years. The last dividend hike was a little bit lower than usual. Hopefully that'll help with the free cash flow issues. So the return on capital employed still hovering around that 15%, and they have been doing share buybacks. So I'm going to assume that they're probably going to put a pause on share buybacks right now, which it hurts when companies have to do that when there's a big drop, because that's usually when you would want to take advantage of the buybacks more. So I don't know exactly what they're going to do. All I know is I do believe in the company long term. They don't have a ton of debt at $5.7 billion. Their EBITDA is $4 billion. Not a concern there whatsoever. So yeah, I'm a bull when it comes to Dollar General long term. Next up is Extra Space Storage, free cash flow yield of 6.11%. They have a dividend yield of 4.52%. Don't really look at payout ratios because it's a REIT. Revenue's been increasing at a rate of 11.73% over the last 5 years. Their free cash flow is continuously growing, 15.57%. And the dividend over the last 5 years at a rate of 15.74%. So, a lot of things ticking with this company in the right direction that I like. I love the free cash flow. Just up and to the right. It's always what you want to see. But this is the portfolios. Whatever, everything's rocking. I intend to get these. Honestly, I'd like to have all these around the $300 range, maybe $350. If American Tower Corp and Avi go down anymore, I will definitely be jumping on that and adding more to those positions. But yeah, that's everything I have for you. Hope you enjoy it. Make sure to hit that like and subscribe button for more. And until next time, see yous.